Yeah.
It's incredible.
So Ryan, what kind of nuggets do you have to offer Dustin? I mean, I feel like this is crazy. I mean, I never expected to get another YouTuber to help out, but you have.
I know. I left my suit hanging up in the closet. I apologize. I went savage tonight, man. I ran 3.5 miles in the dark tonight, but I've had a pretty busy day at work today, but I couldn't help myself to jump on because some of the questions, man. That is your name, Dustin?
Yes, sir.
Hey, Dustin. So you don't have to call me sir, man. Just call me Ryan.
Captain
Ryan. I think my advice is pretty simple, and to keep it simple and start small. I still remember to this day the very first 2 stocks I owned, which was AT&T and at the time Kraft. Those are the 2 stocks I owned. But the irony in the whole thing is when I started investing, it started with mutual funds. And I contend that mutual funds are kind of a thing of the past, really. You don't have to opt for those high fee products now with the introduction of ETFs and index funds and that type of thing. So just talking to these guys and then listening to their advice, try to define for yourself what type of investor you want to be. And I always start people off and say, look, if you're making some money right now, I think Kyle was saying that the best thing you can do for yourself is to land a good job. Now, those good jobs are hard to land, okay? But there is opportunity out there, man. There really is. But in the meantime, what you can do is try to get that first $25 earmarked for yourself and start that account. So starting the account costs you no money, right?
Mm-hmm. Yeah,
and
right.
Earmarking for yourself that first $25 is also very doable for anybody, right?
Right.
So start to earmark those things that you can actually accomplish. I know it's sometimes listening to Matt talk, it's like he's got the solidified job. He's got the portfolio that's established. And I think new investors, sometimes they just want to jump right to that. And that's not, you're missing all the in the trenches work that Matt's done and just wanting to jump to the glory. You know what I'm saying? It'd be the same thing if you looked at my portfolio, but I started with $25, man. I'm not giving you any advice that I wasn't willing to walk myself. You know what I mean?
Mm-hmm.
And
that's phenomenal advice. I remember the first couple. I think I bought 500 shares not 500 shares, $500 of Sirius XM.
Yep.
And I wanted to pull my hair out every day. It would go up 1%. It would go down 1%.
Came public the same year as Google.
Yeah, and I'm just like, freaking out. And now it's like the portfolio can sometimes go down 4,000, but I'm looking at the long term, and I've, like you said, gone through the trenches of, funneling the $100 shares or the $100 positions and the $200 positions, and it's grown. A $100 position was a big deal, then it was a $200 position, then it was a $500, now it's like a $3,000 position is now kind of a big deal. So it transition as the portfolio grows into what your tolerance is and what you're looking for. But yeah, it's all about getting yourself in a consistent, steady rhythm. And like you said, even if it's just $25 a week, I mean, that's important.
All right.
Just have fair expectations as well. Mm-hmm. That money, when you first start, you're going to look at it and you're going to want to monitor it. And you're going to want to wish it to the moon. And you can wish all you want, but that's the hardest part. I always contend that getting to that first $10,000 for any investor is the hardest benchmark you'll ever get to. It really is. I remember to the day when I made my first 10,000, and it was the most impactful to me because it was something that I felt that I would never ever do. And when I made my first 25,000, 50,000, 100,000, it wasn't as impactful as that 10,000, because when you first start, you go through all those trials and tribulations of not watching your money move. You're like, why am I doing this? You go through all the self-deprecating, am I smart enough to do this? Why am I doing this? Why did I get talked into doing this? And that's another piece. You got to make it make sense for yourself too. You got to want to do this. Make it a priority.
Yeah, I think that's wonderful advice. It's an interesting endeavor, man. I think I have the same like dilemma that me and Matt were just talking about with the rat race, because I don't ever remember making my first 10,000. The only thing I ever remembered was that first time I started making like $300 a year in dividends. Because I'm like, it's not a lot of a coffee, but maybe it's a Graham Stephan iced coffee every single day. But that was life changing for me when I saw that first $300. Once I almost hit that, or that 350, where you're hitting that $1 a day, you're like, oh my god, I'm finally getting somewhere. But I remember the first 20,000 pretty vividly. But after that, I can't. Everything else was just a blur, because you can't. When the ball, it's the ball, man. It's just getting the snowball.
I think it just
snowball is a real deal.
As you get seasoned as an investor, Kyle, I think you'd agree that you just focus more on the program than you do on the money. And that's indicative of a pretty seasoned investor. And you can't manufacture that level of experience, man. The only way you can get there is to do it.
Do you have any more questions, I guess, Dustin? I mean, we're just kind of shouting out here because we're kind of used to this world, but
we're passionate.
So if I want to get started, right, as soon as possible. That's the goal. How do I go about that? I need to make my M1 finance account. I don't have to pick my two companies. Do you guys have like mathematical equations, or how you set up your balance spreadsheets to pick your companies? Like, do you have a playlist I could watch on that? Like, that's the education I don't have.
I think all three of us would have a different sort of perspective, but they're all generally leading towards the same direction. And I think it all is very dependent on how active or passive you want to be. I know you said you really wanted to do the forex stuff, but if you just want to get the forex money, and eventually once you're making your money from that, move it over to the dividend sort of payouts and the more passive aspect of things, then maybe ETFs are something for you. There's some really cheap ones out there from Vanguard, Fidelity, iShares has some really cheap ones as well. I know Ryan just did a really good video yesterday or 2 days ago about really cheap, good ETFs that are, they're battling each other now for which is the cheapest in terms of expense ratios. So, I mean, otherwise, Kyle's got some really good videos about reading balance sheets and how you can actually sort of figure that stuff out if you want to become more of a fundamental individual stock picker. So it all is very dependent on what sort of path you want to go down. So yeah, I don't know if either of you, Kyle or Ryan, have any other insight.
Kyle, you go, man. I'm just a guest.
I'd love to touch in, but my internet's quite laggy right now. You guys aren't moving.
I see that.
That's the problem I'm having. So I'm just listening in. I might just let you take over there, Ryan, because
no worries.
I like hearing your voice.
Yeah. So Dustin, hey, how old?
So yeah,
let
me lag out. I'm just gonna listen for a little bit. If I can chime in where I think it's gonna work. Go ahead.
Hey, Dustin, how old are you?
I'm 18.
18?
Yeah.
All right. So my advice is pretty simple. The ace up your sleeve right now, brother, is time.
Yeah, man.
The ace up your sleeve is time. It's worth repeating. That's why I repeat it twice, right? So Ken Kong just says buy VOO. So he probably, or she read my mind. I hate to be, it should be gender neutral, not to assume I know where somebody's coming from, but they read my mind. They really did. I mean, the S&P 500 is a good place to start and get yourself that experience in the market. What I mean by that is it's going to be important for you when you get that first $1,000 in the market and you take your first 20% haircut on that money. How are you going to react to it? Okay. And those are important lessons to go through. They really are. Again, you listen to guys like us talk about investing. We've been through it all. We've been through some pretty tough markets. And, what Kyle's talking about, what Matt's talking about, that they're so seasoned that they would look forward to those opportunities. Beginning investors are not prepared. Because something that Matt said right before I came on here was that investing your hard-earned dollars is in fact emotional. And we want to employ emotion to everything we do in life. The irony in the whole thing is that investing is not done with emotion. It's not. It's done completely with your head. It's completely mechanical. Matt, you can borrow that if you want. So it really is. And so keep in mind the opportunity that you have now at 18 years old to be able to enter the stock market free of charge. Free. I can't overstate how important that is nowadays. And I know at 18 years old, you're not going to appreciate that. I'm 42. You can't appreciate that because when I started, you could pay upwards of $50 to buy a stock. With M1 Finance, that's completely eliminated. Webull, Robinhood, all those platforms have eliminated that. Now all the major full service brokers are dropping because they're losing people, you know? So don't underestimate the opportunity that you have to enter into a good quality S&P 500 just to start and get yourself that passive base started. And then you can deploy those old strategies that we talk about, dollar cost averaging, right? That's where that $25 comes into play. So dollar cost averaging, man, do a little bit of studying up on that phenomenon. It's just putting small injects into money at the into the market, no matter if it's higher or lower. And that'll help get your mind conditioned to separate that $25. And the reason why we start with a token amount like $25 is because when you start, it's not about the money. It's about the psychology of paying yourself first. And it'll get you into that cycle. And then you'll look at it later on down the line and you'll be like, I don't like this $25 deal. I want to boost it up to 50 or 100 or more when that income starts to increase.
No, that's 100% right. I mean, I got to the point where, you know, I started off in my individual brokerage account, $500 a month. Then it slowly went to $1,000. And about a year and a half ago, I upped it to $1,500 automatically on the 15th of every month, going right into the account. And, you know, of course, at the end of the month, I still see how much is left over. But you're 100% right. It's about building that mindset of paying yourself first and understanding to the point where I've now gone to the point where I'm like, do I even need a checking account? I can, you know what I mean? Like totally. At this point, I'm like, do I just get all my money transferred into my individual brokerage account and pay all my bills out of my individual brokerage account? I am now investing more than I spend on a single monthly basis. So it's like, why use a checking account? You know what I mean? Because at that point, you know, I'm using like a checking account to then just take money out of and move into an investment account when all my money should just be going to the investment account first. I mean, it doesn't make any sense. I'd rather pay the small amount of money that comes out of the checking account every month or out of the investment account every month than the opposite. So it starts getting to start thinking about small things like that puts you in a different situation in life. And it all starts with what Ryan said, is just that first $25 a month automatically coming out of the checking account.